right. Well, hello everyone and happy Friday. Welcome back to Trader Tales with IBD. It's Alissa Coram here. I'm a multimedia content editor. And joining me today, we have senior product coach Harold Morris joining me on the show, a fellow IBD Live panelist and one of our in-house options experts. Harold, great to have you back on Trader Tales.
Well, thank you for having me. Appreciate it.
Yeah,
And
and so I
hello to
mentioned
everyone.
So I mentioned you're one of our in-house options experts. So that's something that is especially compelling for our audience whenever we have you on IBD Live, as you talk about how you, as an active growth investor, looking at things through the CanSlim lens, are also utilizing options in your trading strategies instead of buying a stock outright or shorting a stock outright. So for you, Harold, would you say is the biggest benefit or the allure to trading options? Because today I would love for our conversation to focus on using options as active traders. So it's going to be a fun conversation. So what's the allure, would you say?
Probably the allure or the major attraction to trading options is the capital requirements. Trading an option doesn't require as much capital as buying stocks. So, if you're buying a stock, one option contract is equivalent to 100 shares of stock. So if you're buying a stock at 100 and you're going to buy 100 shares, well, that's $10,000. Whereas that same stock, it might cost for an option trade, depending on what type of trade you're doing, it might cost you $200 or $300. So it's much more cost effective trading options than buying stock outright. There are some other issues as far as options are concerned regarding time, but the number one allure is the cost efficiency.
Mm-hmm. And something else too is you can profit on a trade even if the underlying stock itself goes sideways, depending on what strategy you're utilizing, right?
Right, absolutely. So one of my favorite strategies is selling a put. Okay, selling a put, it's a bullish to neutral strategy. So by selling the put, and if you're selling the right put, it's not any put, so you have to know what put to sell. But if you're selling the right put at the right strike, you can profit. The stock goes nowhere. If it goes sideways, if it goes up a little bit, even if it goes down a little bit, you can still make money on the stock. One example was with CF. I did that recently with CF. It was in a base, and it was just really wasn't going anywhere. If you go to the weekly chart, the stock is in a base, but it was kind of riding the 10-week moving average. So I said, okay, well, this is a very liquid stock. I was looking at the strikes that are available. So let's see, I wrote it down here. So on November 7th, I sold the 100 put for $8.40 credit. And then on November 28th, I bought it back for $6. And that equated to, I forgot to do the math, but it was a pretty good profit. It was somewhere around 20% for that trade on a stock that didn't go anywhere, because if you look at CF now, it has gone down, but I sold it on the 28th. But the day when I sold it on the 28th of November, the stock was still in that sideways movement, but I had made money on it because, again, one of the characteristics of selling a put is if it goes sideways, you're making money on what's called theta decay. And I know that's a term that many of you may not, it's one of the Greeks, but that's one of the characteristics of selling a put. You can make money on it if it just doesn't do anything.
Yeah, that time decay. So yeah, that's a good position to be as an option seller. So when you are screening for stocks, Harold, and coming across trade ideas, then I guess before you then figure out which strategy you want to go with, and clearly you have a couple of go-tos that you like doing, it sounds like a key step is determining, okay, am I bullish here? What's my outlook on the stock, right?
Exactly.
Am I bullish? Am I neutral? Am I bearish? And then you can kind of figure out from there what strategy to utilize.
Right. So you got to have your directional bias. And doing research and finding stocks, it's no different. So the typical CanSlim type of research that I do, that doesn't change. So whether I'm going to buy the stock, buying the shares, or if I plan on doing an option, I'm still doing the CAN-SUM research, looking at the sales, the earnings, the profit margins, et cetera, and then looking at the chart pattern. And then from there, that's when I decide, okay, well, am I going to do an option play on the stock, or am I just going to buy the shares outright? I might buy the shares outright if the option pricing is not very attractive. The bid ask might be, a huge bid ask. Well, I'm not going to trade a stock with a very large bid ask, because any of the option traders know sometimes you can get in a stock, but it may not, with that wide bid ask, you may not be able to get out. And that can be very frustrating. I've had that happen where I was in a stock, I wanted to close it out for a profit, but I couldn't get out, and the stock ended up going against me, or I didn't have as much profit as I was expecting. So,
So
you need to make sure, you got to make sure you're trading liquid stocks, and not every stock is got the liquidity that we'd like to see. So you have to be careful on trading options.
So, when we talk about liquidity requirements for a swing trader or leaderboard, we're looking at upwards of, $50 to $100 million in dollar volume. Is there a specific liquidity threshold that you like for your options trades?
Yeah, I do the same thing. 20 million in dollar volume is what they like to use in swing trader and leaderboard. And that's why they make great prospects for potential option trades, because their screening process is on very liquid stocks. Now, I get the question many times, can you trade leaderboard stocks, or can you trade swing trader stocks? When I say trade options on using either one of those subscriptions. Right. And the answer is yes, because a good options trade starts with a good stock. And that's what you're going to find in leaderboard or MarketSmith or swing trader. They're finding good stocks, so they make good option trading candidates.
Yeah, that's a great way of thinking about it. So let's say we're screening for stocks, and I know something that you've come across in screening is Visa. We do have a little bit of an uptrend here from the lows in October, a run up from just below 175, almost up to 220. Now, pretty orderly pullback here, right around the 21-day. Also some support at the 200-day line. So say that this is a setup that we're keeping an eye on. And if you had a bullish outlook here, it sounds like you like selling puts. I guess you could also buy a call, but then how do we figure out what exact option strategy that we want to go with, and what strikes we should be looking at, and expiration too, all of those factors.
Absolutely. You mentioned something about buying a call. That is probably the number one mistake that most option traders make, is buying a cheap call. They get IBD, they're looking at swing trader or leaderboard, or they have MarketSmith, and they say, okay, XYZ stock is setting up. It's in a great pattern. It's got all the CAN-SUM characteristics. I'm going to buy I'm going to buy an option, but they'll go for the cheapest option. And market makers know that. And I bet you, if you were able to do a poll, I bet you there's people out there listening to this right now that said, yeah, I bought an option I bought a call option on a stock. It did exactly what I expected. It went up in price, but I didn't make any money, or made very little money. That's because you bought the wrong strike. So if you're going to buy calls, look at the delta. You want to use delta 70 or higher. Okay, they're more expensive than the cheap ones, but market makers know that it's human nature to go for the cheap stock, and they know that, and they price it accordingly. So if you're going to be buying a call, which I do occasionally, that's what they do in leaderboard. They'll buy a call using an earnings option play. But if you're going to buy a call, look at delta 70. So if you're going to buy a call in Visa, look at delta 70 or higher. And again, it's going to cost you more money, but the probabilities are in your favor by buying that particular call versus something that is a lot cheaper, that is out of the money on the call side.
Exactly. So when you say an option is cheap or an option is expensive, you're talking about the premium there. So
Right.
that's what you pay to get the right to buy the stock at that specific price on or before a specific date. And you don't have the obligation to buy it, right? You could cut your losses, and then you're capping your risk at the premium that you paid is.
Right. That's especially true when you're selling puts, because when you're selling puts, your profit is capped. Okay, so when you sell a put, you're receiving your credit. Your credit, that's the maximum that you can make on that trade. So your profits are capped because you're selling it. If you buy a call, you're pretty much, as long as that stock is going up in price, your profits to the upside are almost unlimited. But
I guess you just have to build that what you paid for the premium into the cost of the trade, right?
Right. So I prefer selling premium. Selling premium is just something I just learned when I was learning to trade options. So it's something that's worked for me. So I stick with that.
Yeah. Okay. So if you sold a put on Visa here, what strike would you be going with? It's currently just under 209.
Yeah,
I guess
so
that's how you said you would look at the delta and look at the.
So I look at the delta. It doesn't matter if it's a call or a put. So I look at the delta. So with Visa, so if I'm going to be selling a put, I'll start with the delta. I'll start with like a delta 30 and see, okay, well, what kind of credit am I going to receive? If I'm very bullish on the stock, I'll go maybe to a delta 40. Okay, the higher you go in your deltas, the closer to the actual price of the stock that you're going to be looking at. So if the stock is trading at 100 and you're at a delta 40, then that is very close to what we call at the money. At the money is just simply the price of the stock. So
the
you'll
strike.
collect more credit, right? So you'll collect more credit, but I always start at the delta 30 because I just want to see what kind of pricing can I get. And if I'm very bullish on the stock, then I will move that up. So Visa, stock that I've had success with in the past, not with options. I traded Visa trading shares. This was before I really got into options, but I'm very comfortable with the stock. I'm familiar with it. I've had success with it. So I'd probably be looking, maybe, I don't know, a delta 40, selling a delta 30, selling a delta 40 put, somewhere around there.
Okay. Well, a good trade idea there. So that's for a neutral to bullish strategy there. But what about a bearish trade? Let's take a look at Mosaic, ticker MOS. This was a stock that shot up like a rocket in February and March, but now it's in a downtrend, hitting resistance at moving averages that are rolling over, Harold.
Yeah. So I was looking at Mosaic on the weekly chart, and as I was telling you before we went on the air, I had to switch computers because or switch my station, so not quite set up here. So forgive me for taking my eye off the camera here, but
no worries.
Mosaic. I was looking at the weekly chart, and you see Mosaic. I'm looking. You see it reached the low of like 46 in that area there, and it reached it. It did it a couple times here. So you got a nice trend line. If it does move to the upside, that would be a nice bullish play. But right there, where you just drew that trend line there, that's what I've been looking at for a possible bearish trade. So even if you're not doing an option, you're not into options, I think this will be a good trade to the downside. So you short the shares. But as far as a potential trade, as far as options, I'd be most likely, I like to do what's called a put debit spread, So a put debit spread is you're buying one strike. So you look at the money. So let's say, for example, Mosaic closed today at 47.81. So you look at, that's what's called at the money if you're looking at an option chain. So you would buy one strike in the money and one strike out of money. So you're surrounding the stock price. And that is a bearish trade. So, and you're looking for, I like to collect at least, or not collect, but if it's a debit spread, you're paying for the option. Whereas on a put spread, you're selling a put spread, you're collecting, you're getting a credit. Debit spread, you're paying for this, and I like to receive at least a buck for the trade here.
Okay. So let's see what happens with it. That's another great trade idea there, Harold. A couple more that we wanted to go over would be one that you, another bearish trade that you did was XLP. So
ETF.
So this is an ETF, just a quick little trade. So I guess that's the other thing with options is, maybe for those who are new to it, what kind of, length of trade are they in for? I mean, really, you can do some pretty short, quick hit and run type trades with options too.
Right. So the time the time for your trade is very important. You want to give yourself the gift of time. So when I'm looking at a trade, it doesn't matter if I'm selling puts or doing what's called a spread trade, where I'm doing a debit spread, either a bullish debit spread or a bearish debit spread. I'm looking to go at least 45 to 60 days out. I want to give myself time for that trade to work. You can go shorter, but it depends on your level of risk. But I found that 45 to 60 days, that's the ideal time frame for doing an option trade.
So talk to us about how this one unfolded recently.
So XLP, I was just looking at it, and it had made a pretty strong move to the upside. And I'm somewhat of a contrarian. So I've got some contrarian in me, and I know, nothing's going to go up forever. So I said, okay, let me just take a look at the option. It's very liquid. It's got some very liquid. It's got a lot of strikes, a lot of expiration cycles. I like that. But the next question, okay, well, what can I do as far as pricing? And I was very surprised. It was it was a cheap option. I remember I bought the debit spread for 89 cents, okay, which equates to $89. That was on a Friday. That was Friday of last week. So a week ago today, I bought it for 89 cents or $89, sold it on Monday for $1.08. So if you do the math, that's a 21% profit over the weekend, which was pretty nice. So
there you go.
So if I've got especially something that quick, I'm going to take the money and run. It is tempting just to kind of hold it, but the old expression, bulls and bears make money, but pigs get slaughtered.
There you go.
And it doesn't matter what you're trading, shares or options. I think that's a good creed just to keep in mind when you're investing your money in the market.
Exactly. So with the spread trade here, what strikes did you choose for the spread?
Yeah, I did not write that down. And
all right, I know we're like doing this on the fly, Harold. I
meant to write that down because I did write down for CF. It was I sold the 100 put, but I did not write that down. And opening up my trade and going to look up my history, that can be a little bit time consuming because something I really when I close out a trade, I move on.
Yeah, there you go. You don't remember.
Right,
that was so Monday.
Right. I will go back and look because, especially what we've been talking about on IBD Live is keeping small, keeping position sizes small. Well,
Right.
There's been times where I made money on something and I see my net lick, my equity curve, it didn't go anywhere. So I said, well, did I actually make money on it? I did, but my trade was just so small that it really didn't move the needle. So then in that case, I will go back and look and see what I did. But, I know we're supposed to do post analysis, but, I'm looking at my trade as I'm actually in the trade. And then when I close out the trade, that's when I look and see, okay, how did I do? That's my analysis right then and there. I don't go back and see what I did, in the past. I know that's not your typical O'Neill type of post analysis, but that's what I do. That's what works with me.
Yeah. Well, in this market, we've been really hyper aware of managing risk because it has been such a tough market. And it sounds like, you can really dial that in with options trading. You got to be careful though. It's,
Yep.
These things aren't guaranteed, and it does that defined risk does depend on which strategy you go with. So that's just also something to keep in mind too, right, Harold?
Right, exactly. Because one thing about options, it has that extra element of time, because if you're just buying the shares, we all know, okay, you got to look at the earnings, the sales, the profit margins, etc. Look at the chart pattern. And then you throw in options, now you got this element of time. And that time, depending on what type of trade that you're doing, it can work for you or you can work against you. And that's another dimension that comes into play when you're trading options. So yeah, it can add another element to, and depending, it could complicate things more if you're not used to, that dimension of time there. So learning options, it is a learning process. And I was going to do a quick plug for the home study course. We have an options course. Our home study course is on sale. One of them is a options course. So take a look at it. And so if you're into options, now would be a good time to get some good training on options from an IBD canceling perspective.
Yes, that's such a great reminder. I'm so glad you brought that up. Well, I know we were just scratching the surface, Harold, but I'm looking forward to doing this with you on a regular basis. I think that would be really fun to do. So thank you so much.
Do we have time to do one other thing?
Yeah, let's do it.
Go to investors.com because there's a good option article on the website at investors.com.
Okay. So a recent article from Gavin or what?
Yeah. And I know I can't see your screen, but there is you got these little radio buttons, and one of them is option of the day on investors.com.
Yeah. So tell us more about, while I'm pulling it up, why don't you just
tell us more about
option of the day?
Yeah. So we have there's an article every day written by a guy named Gavin McMaster, I believe his full name is. And every day he puts an option trade. One of the option trades that he wrote about, I believe was yesterday, was URI. That's something we've been talking a lot about on IBD Live. And that's something that I've been looking at. I like the trade. I didn't like the time that he's using, but all the other aspects of the trade I really like. But I wanted to point that out because I think he set this trade to go back out into June.
Yeah.
So that gives you a lot of time just to, especially if you're new, so you can really watch this trade and see how it works. And then URI, that's a stock that is showing some signs of being one of the leaders in this market. So those of you who are new to options, or if you're an experienced option trader, this article is a very good article. That URI idea, I may not do it exactly, but it's something I'm looking at as a potential trade for my own portfolio.
Yeah, a good place to get trade ideas. So yeah, if we go to our little banner here, I know there's a place where we can find the options here.
Yeah, I forget.
So many things here. I know it's here. It's right here. I knew it was on research.
Yeah.
First. Psyched myself out. So yeah, research, options. That'll take you to this.
And you got a history, so you can look back. And the nice thing about it, not only does he give you the canceling elements of the stock, he also gives you the strikes. He tells you what your profit loss is going to be, potential profit, your stop loss, everything. So the entire trade is pretty much set up in that article. And he also sets it up with, here's what you can potentially earn by doing this trade here. So it's a very good article.
Yeah, I'm glad you brought that up, Harold. Thank you so much. Well, this was a fun way to spend our Friday afternoon. And again, I know we were just scratching the surface, but looking forward to incorporating these into the rotation on a more regular basis, because options are very not only fascinating, but clearly profitable, Harold, because you've incorporated them into your routine. So
yes.
all right. Well, thanks again. And thanks everyone so much for tuning in. And we'll see you back here next week.
Okay, thank you.